Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today we're going to be talking a little bit about this meltup. Is it confirmed or is it about to fail? Going to cover the Fed, because obviously the Fed hiked 50 basis points yesterday. A little bit of cryptocurrency and Bitcoin news for you, and then we'll get into the charts and I'll show you how I plan to deal with these markets over the coming couple of weeks. So I want to start by saying, look, is it me or is there a lot of anger in the Bitcoin crypto space right now, even stocks as well? There's no place for emotions in the markets, okay? A lot of people are getting angry. I'm seeing a lot of hate and infighting on the Twitter feed. There's just no need for it, okay? So let's just try to stay calm and stay objective and see what the charts and the data are saying. This is a really good point here. Why are analysts so fearful of being challenged on their perspective or bias? Why is it that positive confirmation is the preferred course? It's always best to try to falsify your theory and conviction every single day. And as long as you're not able to do that convincingly, then you can maintain your bias or your expectation. The facts are the facts. We have had a lower CPI. We can check that off. We had a 50 basis point hike yesterday from the Fed. We can check that off too. The data is also not telling me personally that this is a bear market rally. We have the Nifty 50 index at all-time highs. The FTSE just 3% away. The Dow is just 7% away. The DAX is advancing right now. The S&P 500 should have a new cycle ahead, and I'll show you that when we get to the charts in a minute. The Dixie and the yields continue to bleed. The VIX is compressing, and all of this is occurring on wide market breadth. Okay, we've got wide market participation. None of this really speaks to a bear market rally. Of course, this could change, and this could change very quickly, but it hasn't changed yet. As far as I can see, we should be going onwards. To summarize what I just said in 4 charts, you can see here, okay, up here, this is the 10-year yield still continuing down. The dollar index still continuing down. Bitcoin is starting to move up, and the S&P is attempting in the coming days, I think, to try to break out of here. Now, that doesn't mean it couldn't be rejected and roll over, but again, it hasn't done that yet. When we move into this melt-up chart, I've been showing this over and over again, we can check this 50 basis point hike off. We got that, okay? Now, remember, I drew this structure here, all this yellow stuff. I drew this on the chart all the way back here. This is all the way back in the summer that I drew this chart. And I put this expectation forward, and I said, this is what I think should happen. Maybe Congress will be banned from owning stocks. Is this where we'll see the rate cut? So it's no good yelling bearishness at me. It's no good saying that I've got to be wrong. If you think that's the case, fine, I'd love to hear it. I would love to have someone show me that I'm wrong so that we can flip short, so that I can flip short, so that I can invalidate this. But as far as I can see, we have an uptrend established in the stock market. This is quite crudely drawn. It doesn't really matter. This is just for illustration purposes. But we have this uptrend and we're still into it. And that doesn't mean we couldn't break down. It doesn't mean we won't break down. And of course, if we do, then we'll have to adjust to that. But all the while we continue up, we've checked this off. Can a pause come next month? Maybe, maybe not. Obviously, the Fed have been talking about raising the terminal rate even higher than expected. I think that's what's causing the current pullback, the current bit of red in the markets. But all I can do as a trader is come up with a thesis and then see if that thesis plays out. And so far, it is indeed playing out. I still think that this is ultimately what investors that are short in equities during this blow-off top move are going to feel. This is ultimately what it's going to be like to short equities. And I know it doesn't make sense. I know there's so many narratives in the media out there that make us think and make us want to believe that that had to be a bear market rally and there's no possible way we could go up. And again, if the chart breaks down, then I will abandon this melt-up thesis. But all the while we continue to slowly grind up towards those all-time highs, all the while these other indexes continue to make all-time highs, it's really difficult for me to be bearish at this stage. I see higher lows while Capo still waits for 12k. And again, you can see he tweets us all the time. Capitulations just started. All these charts are weak. This is definitely redistribution. Every bounce is a bull trap. This is the last bull trap before capitulation. I've spent hundreds of hours analyzing the market, and we have to go to 12k. 17.5 for a local top, then 12k. And at the same time, we're just making higher lows every time. I've shown this over and over again. We've just confirmed this Wyckoff spring, which again, I drew somewhere back here. So about 30 days ago, I posted this schematic and I said, I think we're possibly working on a spring. And it comes back to what I just said about the melt up. All I can do as a trader is come up with a thesis. And I came up with this. I said, maybe we're about to confirm a spring. And if we do, then this schematic here, this Wyckoff accumulation should play out. And for now, that appears to be what's happening. Again, we'll get to the charts a bit later on. It's not just the US CPI that's coming down. We've also seen the UK CPI come down too. So inflation is likely topping across the board, at least for the short term. The Bank of England is expected to hike 50 basis points today, following on, of course, from the 50 basis point hike yesterday from the US, and of course following on from the 50 basis point hike that Canada announced just days before. Smart money is betting bullish on the market. Except for 2008, they've been spot on with their direction. 2008 was the only time they were wrong. Now, that doesn't mean they can't be wrong this time, of course, but it means historically when smart money is loading up like this, bullishness is what is to be expected. Remember, the Fed pause equals a big rally in the markets. I've shown this before. I think the video is called something like Answering Your Questions if you want to go and see that. I did a big deep dive into how the rate hikes and pauses and cuts affect the stock market. But you can see here by all these red dotted lines, whenever the Fed paused rate hikes, the stock market moves higher. It rips higher into the final move. And then going back to my melt-up chart, that's what I'm saying here. Do we get a pause? It doesn't have to come here. Of course, I could be wrong about this pause. Maybe the pause comes later. But at some point, they have to pause the rates. And when they do, historically speaking, that always leads to further upside for the stock market. In the crypto world, there's a lot of news and a lot of things going on at the moment. US Senator Warren has introduced a bill to KYC self-custody Bitcoin wallets and surveil users and crack down on privacy tools. This is a direct attack on freedom and privacy, but of course this won't work. And Senator Loomis is even saying that Warren's bill requiring this KYC and self-custody is going to fail. Of course it's going to fail because humans are humans and humans will always find a way to get around the system. The SEC is charging 8 social media influencers in a $100 million stock manipulation scheme promoted on Discord and Twitter. The SEC is really cracking down a lot on the crypto space. It's really cracking down a lot in general at the moment. And I think this is contributing to some of the fear, some of the uncertainty, and some of the doubt. But make no mistake, there are subtle signs that Bitcoin is going mainstream all over the place. Adoption continues to snowball. Here you have Bitcoin and Ethereum gift cards mixed in with all these sort of regular gift cards you can buy. So this thing just continues to build momentum. It continues to be adopted. It continues to work its way into the mainstream. There's more FUD from Binance at the moment, and almost 2,000 Bitcoin are being withdrawn from Binance every single hour. There's a lot of speculation that Binance might have been involved in some foul play, that there might be a lawsuit coming their way, that the exchange might go down. But remember, you can call out the exchanges. You can find out which ones are engaging in foul play by simply withdrawing your Bitcoin to cold storage and taking ownership of your own private keys. By doing so, you do not permit Binance or any other exchange to sell you paper Bitcoin. If you withdraw it to cold storage, then you know you have it in your hand, you own it, right? A nice chart here from Stock Money Lizards, the Christmas pattern update. So far, so good. So again, I showed this a little while ago. This is an update, of course. In 2019, we had this bump and run reversal right around Christmas time, and you can see here that we've now had the FTX collapse, possibly leading to a bump and run reversal again. Now this chart looks considerably better than it did the last time I showed this a few days ago. We have since broken above this range, just like we did here, and you can see what happened in 2019. Does this mean we are going to get a nice Santa rally this year from Bitcoin? Over in Japan, the energy giant TEPCO Power Grid is going to mine Bitcoin with the excess energy across the country. Again, this is another trend that continues. Despite the price action, despite the FUD, despite all of the exchanges blowing up and all of the reasons to be worried about Bitcoin, the fundamentals have never been stronger. More and more countries continue to engage in this arms race that is acquiring hash rate and mining Bitcoin. And of course, this is likely to continue because the countries that do not participate in building hash rate and mining Bitcoin are going to be left behind economically. This piece of news here is wild. The CFTC considers Bitcoin, Ethereum, and Tether to be commodities. So there's a little bit of text here you can see where they've said certain cryptos, including Bitcoin, Ether, and USDT, meet the criteria of being commodities. And the reason I say this is absurd is because it makes sense that Bitcoin is treated as a commodity. You could just think of it as digital gold. It meets the criteria for that. It has no single point of failure. It's sufficiently decentralized. The issuance schedule is well known. There's no CEO's door to go and knock down. There's no way of censoring transactions using Bitcoin. Ethereum, on the other hand, is open for debate. The Ether token, people like to think of this as digital oil, but it actually functions much more like a security. There are points of failure for the Ethereum network. It is not sufficiently decentralized after the merge to proof of stake. I've shown before on this channel plenty of times that a large amount of the blocks are OFAC compliant blocks, meaning the Office of Foreign Asset Control, which is a department of the US Treasury, are able to censor your Ethereum transactions. So that does not meet the criteria for a commodity. And even if you say, oh, maybe it does, whatever, let's not debate that right now. even if you say that it does, you just give Ethereum the benefit of the doubt. Tether, USDT, the stable coin, how on earth can you consider a dollar stable coin to be a commodity? I don't know. So something weird is going on here, okay? Something super weird is going on here, because only one of these three actually meets the criteria to be classed as a commodity. And even if you disagree with me and you think Ethereum meets the criteria, Tether, I'm sure we can all agree, does absolutely not meet the criteria to be a commodity. So heading into the charts, plenty of red, but I don't think it's time to panic. As I said at the beginning, no emotions. Let's just see what the charts are telling us. Right now, it seems we're still contained, okay? We could draw a line here to show you that we're still being held down by this. We still seem to be on our way to my 100 to 102 target by the end of the year. And so until that changes, until we get above these highs, say at 105, then the trend is down, and this is where I expect us to run into the first bounce on this touch of this blue trend line. It's a similar story for yields. We're still contained. We're still kind of bleeding down. The 2-year yield is the same story again, as you can see. Cannot catch a bid, cannot catch a bounce. None of this, as far as I can see, speaks to risk off. If I hop into this Bitcoin chart, you can see, as I showed you earlier, we are indeed apparently confirming the Wyckoff spring. And if I hop into my other Bitcoin chart here, you can see quite nicely that we have broken out. We are now working on a back test of this line. I did say all along, if we were to convincingly come down here, I'll just cut this trade early and then go again once we get back above this blue line. But also while we're above it, I am long and strong, and I expect further upside. As I've said, there's really only two paths that can happen here. Either we're going to sort of waddle up here, drop down into that cycle low, and then go, denoted by this green arrow here. Or if this is to fail and we come down here, then likely there will be one final dip into that cycle low before we go, and that's where the next long will come from. But as of right now, we're above the line. We need to see how the day closes and how the week closes as well. Geo still working on a bull flag, so we'll see what happens here. A breakout of this could be an entry, or if not, if we decide to consolidate around here, then the breakout above the top of this range will be my next add. Zcash continues to show relative strength, continues to move up, as you can see here. So long and strong continue to push. MATIC continues to go sideways. So again, long and strong continue to push. Ethereum, as I said before, if we get the 50 basis point hike and Bitcoin continues to confirm its spring, then I will take a long position on Ethereum. So this is a tentative position for me. I am currently long Ethereum, but if, like I said with Bitcoin, if Bitcoin collapses back down here underneath this blue line, then I will exit the Ethereum position as well and look to buy Ethereum at the cycle low for Bitcoin, as I did before, all the way back here somewhere. Gold getting a little bit of a pullback right now. So I think this is still too early to form a cycle low. I would at least think we're going to get some sort of counter trend bounce before dropping into that cycle low. But continuing to push this trade, long and strong, continue to push. Silver as well, quite a big red candle, but it's quite an extended move at the same time. So again, not really much to say. We are going to form a cycle low sometime over the next week or two, I would think. Let's say week, sometime over the next week. And then I think from there, we'll find out if gold has a chance at making it to the top of this range. If we get a cycle that left translates, meaning it comes up for a few days and then rolls over quite quickly, then that will be the exit for me, and I'll be confident in saying that we're not going to be able to make it up as high as this. UKX is still lined up, working on a breakout retest resumption. This doesn't look very strong in my opinion, but if we can get a nice big green move away from this, then that will be a long from me. So for now, I continue to maintain being sat on the sideline in terms of the UKX, but I am looking to get long. I just want to see a nice push away, a nice big green candle, and that will be my entry. Here's the VIX, kind of already spoke about this earlier, continues to kind of be compressed, right? Doesn't really speak to big spikes, clear rejection at resistance off of this upward sloping trend line. So to me, not a risk off look yet. If this starts to advance and the stock market starts to come down heavily, then I will of course change my perspective. The Dow Jones, again, not the end of the world, right? Not the end of the world. Speaks to consolidation before a move higher, in my opinion. Now, it doesn't mean it couldn't consolidate and roll over. And of course, if it does that, then we'll have very clear invalidation for all longs and we'll be able to flip short, and we know that we're going much lower. But for now, looks like we're just ranging before attempting to move higher. We could even use the box method that I use sometimes on this channel, like this, and a long out of the top of this box could of course be the trigger. But for now, I think it's safe to say this is consolidation and we need to wait and see a range break to know the direction. Nasdaq, look, still holding above this green line, clear rejection from this big red trend line. As I said, I'll add a position if we get a break of this big red trend line. But for now, we'll see what happens. Can it chop around this green line a bit more? Yes. Again, I still think this speaks to consolidation and base building before a decision. If it starts to convincingly break down, then of course we'll have to flip short. but I wouldn't be surprised to see this chop around and break out of this big red downward sloping trend line. And the reason I say that with a significant amount of confidence is that we have a cycle here in play, a new cycle for the S&P 500. So we haven't broken out of this line, which I'm sure there's an awful lot of eyes looking at this big downwards blue sloping trend line for the stock market. Doesn't mean we couldn't trade sideways or slightly down over the next couple of days, but for now we are still in this uptrend. As I showed you earlier, I could redraw that line for you just quickly. So you can see we're still trending up. So a breakdown of here convincingly, and of course the melt up thesis is likely cancelled, but a break out of here and all the bears are going to get scorched. So again, to finish as I started, no emotions. There's no emotions from me. I don't know what the market's going to do. I'm not pretending to know what the market's going to do. Like I said, I've drawn a thesis, and all the while this is continuing to follow my thesis, then I'm right. I'm right until I'm wrong, and at the moment I have not been proven wrong. Now again, like I said, I could easily be proven wrong if we get a breakdown, and if so, then we'll cancel the melt up thesis and we'll flip short because we know we're going much lower. But as it stands, I'm long and strong. I continue to push. I continue to have no emotions in this market. If you found value here today, I'd appreciate it if you could drop a like on the video. Subscribe if you're not already. Turn those notifications on if you want to see how I deal with these markets in real time as a pro swing trader. I hope you're doing well in life. All the best from me. Take care. Cheers. Bye.